Hello again, my name is Arnold Van Dyke. I'm Director of Tax Services with Tax Audits, and today we will be discussing the difference between IRS levies versus IRS liens. So, what is the difference? So, IRS levy is an actual seizure of property you own. For example, if the IRS levies your bank account, they actually take the money out of your bank account. If the IRS levies your physical property, it's an actual seizure of that physical property. An IRS lien is a public document that notifies any creditors that the IRS has a right to your property. So a lien is not an actual physical seizure of your property. A notice of federal tax lien is generally filed in the county that you reside. So, for example, if the IRS files a notice of federal tax lien and you attempt to sell your home, you won't be able to get that home sold without the lien being satisfied first. But there's no actual seizure of the property once a lien is filed. Procedurally, how are these treated differently? So before the IRS can actually levy, actually seize any of your property, there are obviously constitutional due process concerns. So they have to send you a final notice of intent to levy, which you can appeal and even appeal to tax court if the IRS tries to levy that property. With a lien, it's a little bit different since the IRS can issue a lien in the county that you reside. But once they issue a lien, they have to send you a notice of federal tax lien. So that lien already exists, but then you can also, through a collection due process hearing, dispute the actual lien. So obviously a big difference between the two as far as the actual seizure of property under a levy. Now with both a levy and a lien, the first step is the collection due process hearing, where you can dispute the issuance of either the attempted levy by the IRS or for the actual lien that is filed. At the collection due process hearing, you can generally not dispute the IRS balance if you had a previous opportunity to dispute the balance. So if it's from a prior audit, then there's no ability for you to dispute that. But during the collection due process hearing, you can request a collection alternative to either the proposed levy or the lien that was filed. A collection alternative can either be an installment agreement, the IRS placing you in currently not collectible status, or for the IRS to accept an offer in compromise on your behalf. So during the collection due process hearing, your case will be assigned to an IRS appeals officer in both circumstances of the lien or the levy. And if the IRS appeals officer does not accept your proposal, then they will issue what is called a notice of determination. The notice of determination will basically give the grounds on which they relied to not allow your collection alternative that you proposed. And you have 30 days from the date of the notice of determination to appeal the decision in United States Tax Court. Now, during the tax court process, you have an additional opportunity to try to prevent the levy or work to get some type of other alternative to the actual lien that was filed. But if you're unable to resolve the case with the IRS counsel's office, the case will then proceed to court. The standard that the judge uses in order to side with you or with the IRS is the abuse of discretion standard, meaning the IRS simply has to show that they did not abuse their discretion, when they did not accept your collection alternative. So that's a little bit of the difference between IRS levies and liens. If you do have any additional questions, feel free to contact us or visit our website. We would love to help you out.